Spotify, our favourite company, please monetize us. It's Q4 for Spotify as well, so I've got Q4 and full year for you, and this in euros, despite being listed in America, they do report in euros, being I think a Swedish company. Revenue was up 16% to 4.2 billion euros. Net income, Steve, 367 million, a margin of 9%. About 883 million in operating cash flow, up 122%, margin of 21,877 in free cash flow, up 121%, a margin of about 21%. 675 million monthly active users, up 12%. 263 of them are paying. They're the premium ones, up 11%. About 425 million of them are ad-based MAUs, up about 12%. Premium ARPU was up about 5%. That's average revenue per user. Premium revenue, 3.7 billion, up 17%, 537 million in ad revenue, up 7%. And just on the full year, just headline numbers, revenue 15.7 billion, up 18%, 1.1 billion in net income, margin of 7%, 2.3 billion operating cash flow, up 238%, about 15% margin, 2.3 billion in free cash flow, up 237%, a margin of about 15%. I've got the guide as well. The guide was for 678 million monthly active users. That was 3 million net ads. That sounded like not very many. So I went and had a look back, and it's not very many. Premium sub, 265 million, about 2 million net ads. So they're expecting 2/3 of the ads to be premium subscription. Revenue, about 4.2 billion on the quarter, which is flat quarter on quarter. They reckon a gross profit margin, if you care about that, of 31.5 and about 548 million in EBIT. On the call, they were keen to highlight the record monthly active users, obviously the subscriber additions, revenue, gross margin, operating income, and free cash flow, all improving really well. Their Wrapped campaign and some sort of content cost favorability that they've had at the moment due to their scale. They've had a little change around at the top. The CEO now, Eck, is focusing on long-term strategy. They've got co-presidents now who work together to handle the daily operations and then obviously report upwards. They said that they're an agile organization. They've started to basically do this thinking in bets thing, which is probably something you've heard me say quite a bit. But they're basically swapping to 6-month planning cycles or 6 monthly bets that they're going to like test and try things and try to become more agile as an organization. And they've said that 2025 is just all about accelerated execution. They're going to try and innovate on the products, bringing music and music video in particular to Spotify, which is something that they've not had before, which will differentiate them from others. They're focusing on video podcast growth. They said there's rapid expansion in that. That'll be for us, Steve. And new monetization for creators. That will hopefully be for us too, Steve. We're going to get dynamic ads implemented for video podcasts, but no current plans for dynamic ads in audio, which I think is something that will probably come in the future, because I see podcasts as being the eventual replacement of radio, and those radio advertisements have to go somewhere. And why not to somebody like Spotify who knows a little bit more about the end user than the radio station does. I mean, the radio station knows they have an audience, but they don't know you as well as somewhere like Spotify would. There's going to be some tailored experiences for people, so they're going to try and get everybody into subgroups. They're going to try and find super fans for artists, and they're also exploring a high fidelity audio tier, which will be a little bit more expensive, but you're going to get, if you're an audiophile, you're going to get better quality audio, which is something people have wanted for quite a while. So we'll see how that goes. They're moving to automated and programmatic advertising sales. So I would assume they're either borrowing the trade desk's IP or using the trade desk to do that. So they said that Q1 is going to have an element of weaker performance to it, but they're confident that over 2025 they'll return to decent growth. They think gross profit margin and free cash flow will improve quite strongly in 2025. They've got some targeted investments, though, that could cause variability. In terms of AI usage, Steve, because everybody is. They're going to use it for productivity, they're going to use it for moderation, and they're going to use it for user recommendations. They're the key things that Spotify thinks AI will be good at. It kind of similar to what Netflix uses it for, productivity and user recommendations. They said it's win-win with labels. They're emphasizing that with the labels, it's a collaborative relationship where, if Spotify wins, the labels win. So they're hoping that continues. Pricing strategy, they're saying that after going so long without price increases are now a tool at their disposal. They think they're good for ARPU growth. They're going to try and balance it with good value. I think they do a decent job of that so far. They want to keep the company culture focused, value, creating and scalable. And like I said earlier, they were confident that healthy growth and improved profitability is to come. About 2 or 3 years ago, Stephen, we used to cover this. We were struggling to see. I mean, we could plot a path to profitability, but it just seemed like Daniel Ek didn't want to go down that path. He's gone down it now, and Spotify looks a much healthier business for doing that. It's the business that I sort of think with Salesforce has made the most change to actually trying to make a profitable business out of their endeavors. And Spotify has been rewarded for doing that, Steve. So just back a couple of years ago, you were talking about a $70 stock. Today, you're looking at a $623 stock. That's up about 700%, 710%. Still only 125 billion in market cap, but that's a PE ratio of 110. Is this any closer to your buy list, Steve?
Yeah, and the market responded pretty well to this latest report. I think I get so there's nothing I feel negatively about in this report, I think. There are things that I'm more positive on and more indifferent to be honest, of the list of stuff that you read out there. It's on my list to keep an eye on. You mentioned that they're perhaps expecting a little bit of unevenness in terms of, basically cash flows, but revenue, profits, and so on over the course of the next quarter, maybe this year, with a few things kind of going on in terms of investment, and that might be something that causes some choppiness in the stock and may well make it worth looking at. But yes, you said about 1.1 billion in profits and a market cap of about 125, so that'll take you to merely 100 or so. The numbers wise, I was all very impressed by all of this. Continuing to add subscribers, it reminded me a lot of Netflix, which was a report that I thought was really outstanding from this quarter. I think that's probably the outstanding report I've seen so far from anybody, and there's a lot that's similar in terms of Spotify. The difference between Netflix and Spotify is that Spotify absolutely has to buy in its content, and it's clear what content it needs to have or what kind of music it needs to be able to stream. Netflix has a little bit more scope to innovate or be creative or try and do something different, and my sense is that really won't work with Spotify. And so that relationship with the labels that you mentioned is basically crucial. And I get that it works in both directions. Spotify, the more that platform gets bigger, the more it becomes a good thing for labels to have a good relationship with Spotify, as well as Spotify realistically needing them too. But if they can manage that relationship well, I think that's a good thing. Video-wise, there's a couple of bits here actually that leave me more indifferent. One is the better audio thing, because I'm not a proper audiophile. To be honest, I'm not sophisticated enough as to really care about that, so I probably wouldn't be interested in their higher tier. But if they think there's a market for it, well up for them having a look and seeing. Equally, video stuff, I couldn't honestly care very much about music videos on Spotify. Part of the point of Spotify for me is that I don't look at it. I have YouTube if I want to look at things, whether they're music videos or whatever. Spotify I mostly use as a listening thing. When I'm not looking at my phone, I'm either meant to be or am in fact doing something else and tend to have a listen. We're a video podcast on there. I'm not sure whether anyone actually watches us on Spotify. Do comment down below if you either watch us or anybody else on Spotify. But I'm not super sure that I think that's a large and important lever for them. But we will see. I guess. Then you mentioned the pricing point. Yeah, it had stood out to me that pricing has been fairly static from Spotify, and we've talked a long time about, again with Netflix, the idea of get people in, have them nicely integrated into your system, and you can raise prices gradually from there. And the incremental dollar that you gain will drop nearly all the way through to your bottom line with nearly no friction. So that kind of price increase for revenue becomes very, very high margin. And I wouldn't be surprised to see this 100 PE starting to come down fairly quickly, maybe notwithstanding some volatility from investments along the way, Steve. I thought this was really good as a report, to be honest. Mixed feelings on some of their innovations, but thinking in bets is a nice bit of reading for anybody that's interested. And if they're implementing that as a kind of strategy, then, well, it gives you a license to try some things out.
Yeah, I agree with that, Steve, completely, and I agree. It was a very good report. 47% of people who watch on Spotify watch 47%. Sorry, who listen on Spotify actually watch the podcast for us. So it's actually quite a high number. It's kind of intriguing to me that I think this is the video podcast side of it has maybe changed their mind about this music video stance that they had. I think they've kind of been the death of the music video, especially the amount of focus that used to be on it in the MTV days. Spotify has essentially killed the video, and now is about to save it. So we'll see how that goes. I think that's really interesting.
You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.